What's going on, everyone? I hope you guys have all been enjoying your weekend. So what I'm doing right now is doing a little bit of homework for everyone so we can kind of, get this week levels marked out, look at the overall sentiment of the market and kind of understand where we sit so we can be prepared on both sides of the market, especially if you guys are trading NASDAQ futures or you guys are trading any of the NASDAQ 100 stocks. This is going to be a good technical analysis video for you guys. So on Friday, we did close down, just under 1% on the day. However, we have had a phenomenal month and a half run up ever since coming off the lows of that 11,000 area. Currently, right now, the NASDAQ 100 did close at $13,216. One thing that I still do want to take a look at here is if we take a look at the highs that we put in from Friday, and if I can adjust this just a little bit here, that 13,387 level is still going to be the continuation break to the top side, right? So what we are looking for here is, if you look at this purple line on my screen, this is a 20-day moving average here, the 20 SMA on a daily time frame. This yellow line here is the 200. You can see that this 20 is on an incline up here. I would expect this to continue to rise here unless something catastrophic happens to where we break and close below. Then that would be a change in trend. I could ultimately seeing this rally push into the $14,000 level on the NASDAQ before we see any sort of significant pullback. Now, does that mean that we're not going to see, a red day like this, or a red day like this, or even perhaps two red days like this, or even perhaps a day like Friday? Absolutely not, right? Even in any bull market, which we are not in a bull market, but any sort of rally or any sort of trend, there's always going to be moves in opposite direction. Just like when we were trending lower for 7 months, didn't mean that every single day was red, even though it kind of felt like that. You did have some aggressive intraday rallies to the top side. You did have some big 2-3 day, even 1 week rallies, sort of dead cat bounces. So would I be surprised to see the NASDAQ lose 13,000 this week and perhaps trade down somewhere into the range of 12.7 or 12.8? Absolutely not. I think that would in fact be healthy for the overall stock market for this rally to continue. So what that means is if we start to lose Friday's lows, I can see us coming back down into this range here and perhaps giving this 20-day moving average enough time to continue to creep higher to hold some support here. So what it would actually look like would be a pullback into this rising daily 20 SMA support, consolidate 1-2 days, and then push higher. The next time we do break through that 13,387 level would be an area of opportunity where I'm going to want to get long, either if you're trading the NASDAQ futures or if you're trading any particular NASDAQ 100 stocks such as Microsoft, Nvidia, Tesla, so forth and so forth. So if we do hold this area, because the bulls did try to step in here off that $13,000 level on Friday, bulls did step in here and they did drive the price higher. One reason why we kind of did that, if you go back just a few days and you go back to July the 29th, you go back to August the 1st, as well as August the 2nd, you can see when we had this 2-day breakout here over the last area of resistance, which was here on July the 22nd, we had a nice 2-3 day run up here and then we pulled back, right? So as we pulled back, all we did was accumulate more buyers and then we exploded higher. It wasn't until, it's not until you start losing like a previous day's low and start working your way below that is where you need to kind of flip your bias entirely. Now, does that mean that we don't perhaps maybe gap down or perhaps off the open wash out? Absolutely not. In fact, what I would actually be looking for is either a nice gap down. So if you did play options to the put side and you are betting and swinging those through the weekend, if we get any sort of gap down, I would definitely close up that position because you don't want to get trapped down here. Take those profits, reassess the situation. If we do lose that initial opening range lows, maybe in the first 1 to 2 hours after the market has been opened, we can reattempt to short that on a scalp position intraday. But if we gap down, take those profits, allow the bulls to step in here, allow the bulls to consolidate and then push higher, then you can actually take your area of opportunity to sort of bounce this to the upside and use the day's lows as your stop. Or if you're a little bit more of a patient trader and you want to actually catch that confirmation of a breakout, you would be looking for a price over 13,087. So if I actually go here to the 1 hour time frame, you can see how those levels that I've drawn on here, the supply and demand levels, are going to match up almost perfectly, right? So I made these lines here, these supply and demands, off the daily time frame, kind of looking at the body of structure of work here. I'm taking the highs, I'm taking the lows, I'm taking previous resistance, I'm taking previous resistance, going to act as new support down here, previous resistance, going to act as new support down here if we do make it down here, which I feel would be very, very comfortable and a very healthy back test. If we kind of look at what happened last time we broke through this 12.7 range here, we broke it, we tried to get above it, we couldn't hold, we flushed. This time when we broke it, we put in a new high. So I would expect this to be a nice break and retest, and if the market continues to be strong, I would expect it to then push off of that. That would be a picture perfect healthy move for the bulls. Now obviously if we do lose the 12.79, we would be looking down here for the next area of support to be that 20-day moving average, and obviously any close below the 20-day moving average is going to be a short-term sentiment change, and we would be looking more so to short the rips and then play the dips down through the lows. That's exactly how you play it. That's exactly how an experienced trader is going to look at this chart. So if we just kind of look at the 1 hour time frame here, all I'm looking at here is a break over 13,384. That break to the top side validates continuation play. You could play long that way. Also know your support is down here at 13,091. If we do crack below this, because you can see multiple times before we came into this area, rejected. We came into this area, rejected. If we do lose this area, I would expect a nice wash, and that wash could go as low as 12,860, and the bull case would still be intact. I hope that makes sense. If you guys are interested in learning how to day trade options on particular stocks, especially stocks like Tesla, stocks like Apple, Nvidia, AMD, Meta, all of the big ones, even the SPY, anything, if you guys are interested, make sure to join the Discord. That link is down in the description box below. If you guys have an interest in actually day trading futures, I would recommend anyone getting started in day trading to not risk your own capital. It can be very, very dangerous to start risking your own capital, but I would definitely not recommend to just open up a paper account to, go trade options like Tesla and stuff like that. It really does you no good. You need to have a little skin in the game, meaning you need to have some consequences if you just trade recklessly. I would recommend go trade for a prop firm. I also work for a prop firm, which is Top Step, US based, Chicago based trading prop firm. You can get funded up to $150,000 to trade futures. Predominantly, I'm going to be trading the NASDAQ futures, which is /NQ, as well as the S&P futures, which is /ES. You can take a look at those charts. They're going to move in tangent. So if you've ever traded the Triple Qs ETF, or you've ever traded SPX, or you've ever traded SPY, it's all the same thing, right? It's just different asset classes that we're going to be looking at here. With that being said, that link is down in the description box below. Also know any macro break below 12.729 12.729 is an absolute change in trend, and we would be looking for possibly another leg down below the 12.729, or at least come down here to these recent lows that we had just a couple of weeks ago at around 12,000. Now obviously we still know that our recent all-time lows here on the NASDAQ is 11,000. So definitely any break through the 20 SMA could definitely take us down into that 11.4 and even 11.3 area, and anything below 11,000 is a new leg down. Hope you guys enjoyed the video. If you guys did, make sure to like, comment, and subscribe. Make sure to see everyone in the Discord this week, and I will catch you guys all in the next video.